Welcome back to the deep dive. Today we are looking at a company that has, well, it's effectively turned the defense industry on its head in just the first few weeks of 2026.
Oh, absolutely.
We're talking about AeroVironment, ticker symbol AVAV.
And it is honestly one of the most fascinating shifts we've seen in the sector in, what, a decade?
It really is. But before we get too excited about the charts, and believe me, the charts are absolutely wild right now, we need to be very clear about the ground rules here.
Okay.
We're going to be throwing a lot of data at you today. And the reality of the market is, that data can be wrong and things can change fast.
Right. Nothing here is guaranteed. We are working with the best information we have as of, January 18th, 2026. But the landscape shifts.
And more importantly, this is not investment advice.
Not at all.
We are here to explore the business model, the technology, the strategy. We are not financial advisors, and we are emphatically not telling you to buy, sell, or hold anything. Please.
Do your own research.
Do your own research. Check the filings. Talk to a professional.
Yep. The due diligence is on you. We're just here to make sense of the noise and help you understand the machinery under the hood.
Okay, housekeeping done. Let's look at the situation. It is mid-January 2026. If you hold AeroVironment stock, you are likely having a very, very good year so far.
A very good year is an understatement. The stock is up over 50% just since New Year's.
It's gone vertical.
It has. It's the kind of move you usually see in, crypto or biotech, not defense.
And the interesting thing is, if you ask the average person on the street, they probably still think of AeroVironment as just that drone company.
Right. But if you are still looking at them as just a niche drone maker, you are missing the entire story.
Completely.
They have fundamentally changed their DNA over the last 12 months.
That is exactly what we need to unpack. Because looking at their latest filings, they aren't positioning themselves as a gadget maker anymore. They're positioning themselves as a defense prime.
Exactly. They want a seat at the big table. They want to be mentioned in the same breath as Lockheed Martin or Northrop Grumman.
So our mission today is to figure out if the company actually justifies this massive stock price run-up. We need to look at the business model, specifically this consumption model everyone is whispering about, the massive acquisition they made, the financials, and of course, the risks.
And we have to talk about the valuation, because when a stock flies this high, the air gets very thin.
Let's start with that business model. You mentioned something earlier that I think is the key to understanding why Wall Street is suddenly in love with this stock.
The shift.
The shift from a maintenance model to a consumption model.
This is the aha moment.
Yeah.
To get it, you have to look at how the defense industry has worked for, the last 50 years. Think about Lockheed Martin building an F-35.
Okay. It costs a fortune, takes forever to build, and the government buys a set number of them.
Right. And once the government buys it, they want to keep that thing flying for 40 years. So for Lockheed, the business is selling the jet once and then making money on service contracts, upgrades, and repairs for decades.
It's a low-volume, high-maintenance relationship.
Very. Because an F-35 crashes, it's a national tragedy and a congressional inquiry.
Right.
Now look at AeroVironment. They are pioneering what they call the attritable model.
Attritable. I see that word everywhere now in Pentagon reports.
It's a polite military way of saying disposable, or at least expected to be lost. The core of AeroVironment's growth right now is the Switchblade. It's a loitering munition.
So it's basically a drone that turns into a missile.
Correct. It flies to the target, it identifies it, dives in, and explodes. By definition, it's a suicide mission. Ideally, it never comes back.
So economically, that changes everything. You aren't waiting for a maintenance contract to kick in.
You're waiting for the reorder.
The reorder.
It turns defense hardware into something more like a commodity business. It's almost the razor and blade model, or selling printer ink. If the Army fires 500 Switchblades this week, they need to buy 500 more next week.
It creates this high-velocity recurring revenue stream that you just don't see with aircraft carriers.
Exactly. That is a massive psychological shift for investors. You aren't betting on a single massive contract win every 10 years. You're looking at a constant flow of consumption, like selling bullets.
Very expensive, very high-tech, smart bullets.
Yes, exactly. And that is why the revenue numbers we're seeing are so explosive.
But the Switchblade isn't the only story. We have to talk about the elephant in the room, the acquisition.
Oh, yeah.
Back in May 2025, AeroVironment bought a company called Blue Halo.
That was the catalyst for everything we're seeing now in 2026.
And it wasn't a small purchase. We're talking roughly $4.1 billion. For context, that essentially doubled the size of AeroVironment overnight.
It was a bet the company move. Absolutely.
So why do it? If the disposable drone business is booming, why go out and spend $4 billion on a company that does what exactly? Space lasers.
Space, cyber, and directed energy. That's the new segment. But to understand why they bought it, you have to understand the kill chain.
Okay, walk us through the kill chain.
In modern warfare, there's a loop. You have to detect the enemy, track the enemy, and then engage or, destroy the enemy.
Right.
Before the Blue Halo deal, AeroVironment was really, really good at the engage part. The Switchblade is the spear tip.
But they needed someone else to tell them where to throw the spear.
Exactly. They were reliant on other systems for the data. Blue Halo brings the detect and track capabilities in-house. They have advanced space communications, tech specifically the SCAR system, and electronic warfare capabilities.
So Blue Halo provides the eyes and ears, and AeroVironment provides the fist.
Precisely. It allows them to go to the Pentagon and say, we don't just sell you a component, we sell you the entire solution, from the satellite spotting the tank to the drone destroying it.
That's how you become a prime contractor.
That's the move. And you mentioned directed energy. That's lasers, right? The low UST system.
Yeah.
And this fits the consumption model, too, just in a different way. If you were being attacked by swarms of cheap enemy drones, you can't shoot them down with $2 million Patriot missiles.
You'll bankrupt winning the battle.
The math just doesn't work. But a laser, the low CST system, costs about $1 per shot, basically the cost of the diesel for the generator.
Right.
So AeroVironment now owns the cheap offense with switchblades and the cheap defense with lasers.
Okay, strategically, I get it. It sounds like a perfect marriage. But let's look at the scoreboard, because strategy is one thing.
Execution is another.
Exactly. The Q2 FY 2026 earnings came out recently, back in December.
And the headline numbers were just, well, eye-watering.
Revenue for the quarter was $472.5 million. That is up 151% year over year.
I mean, if this were a software startup in Silicon Valley, you'd be popping champagne. For a defense contractor, that is unheard of.
Now, I have to play devil's advocate here. A huge chunk of that was just buying Blue Halo's revenue, right? They bought a company, so they bought its sales.
That is a fair point. Blue Halo contributed about $245 million of that. So yes, the acquisition inflated the top line. However, and this is key, if you strip that out, the legacy AeroVironment business still grew organically by 21%.
Which is still incredible double-digit growth.
It is. Most defense primes struggle to grow 3 or 4% a year. AeroVironment is growing its core business at over 20% while integrating a massive acquisition.
And the backlog looks strong, too. I'm seeing funded backlog at a record $1.1 billion.
That is the safety net. Funded is the important word there.
Right.
That means the money has been appropriated by Congress. It's not a wish list, it's a to-do list.
Okay.
And they had $1.4 billion in bookings just in that quarter. That gives them incredible visibility for the next couple of years.
But, and there's always a but in these deep dives, let's look at the bottom line. Net income.
Here is where the picture gets messy.
They reported a net loss of $17.1 million for the quarter. So revenue is way up, but they lost money. How does that work?
On a GAAP basis, yes. But you have to put on your forensic accountant hat here. You have to look at why.
So is the business actually bleeding cash?
No. The loss is primarily due to non-cash expenses, specifically amortization and purchase accounting from the Blue Halo deal. That hit them for about $48 million.
So they're just writing off the cost of the purchase over time.
Correct. If you look at adjusted EBITDA, which strips out those accounting quirks to show the operational cash flow, they made a positive $45 million. So the business itself is profitable.
Okay, so the loss is largely accounting noise. But there's another number in these reports that worries me more than the amortization.
The margins.
The margins, you spotted it. This is the real conflict in the financials. The legacy business, the drones and so on, runs at a very healthy margin, about 18.5% EBITDA margin. That is a great business.
That's a cash machine.
But the new segment, the space and cyber stuff from Blue Halo, the margin was only 2.2%.
That is thin. That is grocery store level thin.
So they spent $4 billion to buy a business that is barely breaking even on an operating basis.
And that drags the whole company's average down. This is the argument the bears make. They say AeroVironment bought growth, but they bought bad growth.
They bought revenue, but they diluted their quality of earnings.
That's the risk. The challenge now is fixing Blue Halo. They have to streamline it, cut costs, and get those margins up to match the legacy business. If they can't do that, this acquisition is going to be a heavy anchor.
And that leads us perfectly into the risks, because fixing a company isn't just about spreadsheets, it's about people.
We call this integration risk. But really, it's a culture clash.
Explain that. Because on paper, they're both defense tech companies. Shouldn't they get along?
Not necessarily. Think about the DNA. AeroVironment was founded by Paul McCready, a legendary aeronautical engineer.
Right.
The company is built by tinkerers, inventors, engineers who love solving aerodynamic problems. It's a methodical, engineering-first culture.
And Blue Halo.
Blue Halo was a roll-up. It was created by private equity firms buying lots of small companies and smashing them together to create scale quickly.
Yeah.
That's a financial culture. It's about speed, deal-making, and rapid growth.
Those are two very different vibes.
Very different. And merging a methodical engineering culture with a fast-paced, PE-backed culture is incredibly difficult. If the key engineers at Blue Halo get annoyed with the new management and leave.
Then you just spent $4 billion on an empty shell.
Exactly. The IP walks out the door every evening. And there is precedent for this being tricky for them, right?
A Telerob acquisition.
Yes. That was a much smaller deal, the German robotics company. But they eventually had to take an $18.4 million goodwill write-down on it. It just proves that buying cool tech doesn't automatically mean you succeed at running the business.
So execution is the biggest risk. But let's flip it back to the positives. Why are investors ignoring these risks? What's the moat that makes this stock so attractive?
The moat is twofold: regulation and manufacturing.
Let's hit the regulatory one first. The source material mentions the NDAA 2025.
This is huge. The National Defense Authorization Act for 2025 effectively put a freeze on new authorizations for foreign-made drones. And let's be honest, that is specifically targeting China and DJI.
So if you are the U.S. military or even a police department getting federal grants, you basically can't buy the cheap Chinese alternative anymore.
Right. It creates a walled garden around the domestic market. AeroVironment is the biggest, most trusted domestic supplier.
Yeah.
They win by default in many cases because the competition has been legislated out of the room.
That is a very nice position to be in. And then there's this replicator initiative.
Right. The Pentagon realized they have a problem. They are too slow. China can build things fast. The U.S. takes 10 years to build a tank. Replicator is the initiative to field thousands of autonomous systems and do it quickly.
And AeroVironment is the answer to that.
They're the poster child. Why? Because they have the factories running now. There are a lot of defense startups with cool PowerPoints and prototypes. AeroVironment is shipping Switchblades by the crate.
The sources say the Switchblade 600 represented over 70% of their loitering munitions revenue recently.
It's a workhorse, and it is battle-proven. In the defense industry, that label is worth its weight in gold. It means it works when people are shooting at you, not just in a test range in Arizona.
You can't replicate that trust overnight.
You really can't.
So we have record revenue, a government mandate to buy their stuff, and key competitors banned. But we also have a massive integration headache and low margins in the new segment.
It's a mixed bag of high potential and high execution risk.
Which brings us to the final multi-billion-dollar question, the valuation, the stock price. It's January 2026, and the stock is at all-time highs. Is it expensive?
By traditional defense standards, it is nosebleed expensive.
Give me the numbers.
Well, one analysis we saw cited a value score of 3 out of 100.
Wow.
Meaning 97% of stocks are considered better value plays than this based on the raw math.
That is stark.
Look at the price-to-sales ratio. This tells you how much investors are paying for every dollar of revenue the company brings in. A boring, steady company like Lockheed Martin or Raytheon usually trades at maybe 2 times sales.
Maybe 3 on a good day.
Maybe. And AeroVironment,
Where are they?
they're trading north of 10 times sales.
So investors are treating it like a tech stock, a software company.
Yes. The thesis is that AeroVironment is a growth stock, not a value stock. Investors are betting that the revenue will double and triple again in the next few years. They're betting that this consumption model will eventually generate software-like returns.
But that means the stock is priced for perfection.
Exactly. The market has already baked in the idea that they will hit their guidance of $2 billion in revenue for FY26. They've baked in the idea that they will fix the Blue Halo margins.
Which means if they stumble at all,
If they miss an earnings call by a penny, or if a factory shuts down for a week, or if the integration hits a snag, the drop could be brutal.
volatility is the price of admission here.
Correct. This isn't a stock you buy for a steady dividend in an app. It moves 5, 10, 15% on news. You have to have a stomach for that.
So let's bring this all together. We have a company that has successfully pivoted, They went from a niche player to a $2 billion run rate powerhouse. They have a massive moat with the Switchblade and regulatory protection.
And they are riding the biggest waves in defense, the shift to autonomous, attritable systems.
But they have a huge integration headache to manage with Blue Halo. Their margins are currently compressed, and the stock is priced as if they've already won the Super Bowl.
That is a fair summary. The old defense industry was about maintaining platforms. The new defense industry is about speed, software, and attrition. AeroVironment is trying to prove it is the leader of the new.
So the question for you, listening right now, is this. Do you believe the replicator era of warfare is just beginning and we are looking at the next Lockheed Martin in its infancy? Or is the hype already priced in and the hard reality of manufacturing execution is about to set in?
That is the question every investor needs to answer for themselves.
We will leave you to chew on that. A massive transformation, a consumption model that changes the economics of war, but a valuation that demands flawless execution.
It's certainly going to be an interesting year to watch.
Thanks for joining us on this deep dive into AeroVironment.
It was a pleasure.